off, or would you like me to?
Sure. I
Maybe.
actually had been talking about this a little bit about journaling in general, not just writing down the trades. And I started
I
putting
was just gonna
together.
maybe suggest maybe we could go over like the psychological of kind of trading all-time highs, maybe just because
I was muted.
we're up
Sorry.
here.
I'm talking. I'm like, wait, he's talking over me. Sorry. I'm so
Oh
sorry.
no, it's
It'll
okay.
be on
No,
the
no, no.
recording,
You're
and I'm like,
totally fine.
and I'm muted.
Right.
um,
You're like, okay, recap.
well,
Take
what I was
two.
thinking is I'd started to put together an individual trade journal that is all the things mentally that are my check the boxes that I learned to do it earlier, that whole scripted check the boxes of am what I doing in my own best interest, those kinds of questions. So that's in process. I found I didn't like the original one I started late last week. And that's one of the things you'll see with me. Anything that I produce, it's because I've tested it. I go through it. I don't just throw a bunch of stuff on the paper. So I'm walking through mentally what all of these are. But I think if we're recording them, if you have to write down, if you have to reflect, not just on entry and exit, but where the market was and some other things, I think's pretty important to learn. And I don't think a lot of people do it, at least at the beginning. Those of us that have been around for a long time, it starts to become automatic. And so that's kind of what I was thinking we could go into because I mean, trading at all time highs, I can't touch this here. Like, we're very likely to just consolidate sideways
Yeah,
in a
I guess a
10-point
rather
range.
quick conversation.
Right. So,
Right.
we've
Be
we've
patient. Go do
both had some
something
nice
else. Yeah,
trades
totally.
today. And so don't really like I won't be in a trade while I'm streaming anyway, for the most part,
Right.
but especially right here. And I should say
Yeah.
streaming, recording a session like this. I stream and trade all the time, but it's not tradable here effectively unless you really like to
Off
take
all time
those
highs.
yeah, those like 3 tick kind of trades. And I do have my
Yeah.
swings that I'm managing, but aside from that, just like going off the top of my head, thinking about things, and I posted about this in the psychology channel when I very first started here back October 2021. So I'm going to run through those and then dig a little bit deeper into it. So things I ask
Yeah,
myself
sure.
before a trade, trading is not just memorizing patterns. So you've got to be really focused on, yes, you should be familiar with what the inverted head and shoulders looks like on high time frames and not so focused on them on the small time frames, but the being able to see the overall position. So if you want to get better at this game, you have to ask yourself, what are the traders on the sideline thinking? So people who are not currently participating in the market, which is me right now, what am I thinking? If I'm in a trade and I haven't already thought about what other people who are not in a trade are thinking, I'm already one step behind because it's a trading is always multiple people involved. It's always different people and it's driven by emotion to some degree, but by levels to a high degree. So, where will the other traders get trapped is the next thought. So, if they're already in and they're like, oh, damn, okay, all right, oh, now I just have to hold it, which is never the right thing unless it's levels based. But trapped is a different term. So, where will they get trapped? At some point, the max pain hits of I just can't take any more of a loss. I'm going to exit this trade. And that's usually on a true double top or true double bottom, which is the look above and fail, look below and fail. So, where will that happen? Which is why we talk about not putting your stops directly at the previous session low of day. You have to give it a little bit of room because it's likely to wick underneath it. And people call that stop hunting, but it's literally that is what a true double bottom is. The second one is lower to just make sure there's nothing left down there. So, where will they get trapped? Where will their max pain be in relation to what my positioning is something that I think is really important to be mentally kind of putting out there. So, what about where's the path of least resistance? And that's the same kind of concept of trade with a trend, but path of least resistance is more relative to where the traders are currently positioned, where they're trapped, what they're thinking, while trend is critical the path of least resistance can be a very relative thing depending on what time frames you look at. And the next one, where will the new players enter? So where, while you're in a position, while they're in their position and you're thinking about entering your position, which is all the time, who's coming in behind me? Who's going to trade behind me? Who's going to run the freight train along with me instead of me just doing it? Where will the losers cut? So there's a difference between trapped and cut, because they could be trapped and hold a position down 60 points on ES, which is unfathomable in my mind, but they do. That's trapped. Where's the max pain of where they need to cut is it's a different thought process, even though it seems like it's pretty similar. So where's the market structure? And I actually start my thought process from the market structure range before I do anything, because that's what I do right as we close our session. And I actually do it after 5 p.m. on ES on the futures, because I use RTH open until 5 p.m. for high and low in the day, things like that. But you have to know your market structure. If you don't know what's happened in recent trading, things like overnight high, overnight low, all-time highs, previous high of the day, previous low of the day, so on and so forth, you're coming in blindfolded. And that's a very unfortunate thing to do. So this is not in any particular order. It's really just a mind dump of all the things that are relevant to what I'm thinking about. So major support and resistance areas, being aware that if that was a double bottom potentially where people are going to they're going to cut their loss. Well, if they were short near the low, we can call it a swing low, we can call it the low of the day, we can call it whatever. They're going to cut their losses on a breach of that low. And I'm looking at it as a look below and fail. Breach of the low, recapture, which is just, it's a different process, but it's how I look at things. So can I lean my stops against the support and resistance? Yes, but not on the actual dollar amount is what I think about. So I don't say, hey, we're at 440. If we break 440, I'm out. I'm saying on a 30-minute candle close, I want this double bottom to hold, but if we wick below it in that 30-minute time frame, I'm fine with it, because everyone else calls that a stop hunt or whatever, but it's literally just looking to see if anything else is down there to take out all the stops. And that's what wholesale buyers do, which are who is primarily moving the market, is flush, grab up all the inventory, mark it up and sell it, which is what what markets, not just trading markets, but if you have a convenience store, you buy product at a lower price, you mark it up and sell it to those needing convenience. And let's see, where would the opposing pressure come in? So where we'll use this morning as an example, making new all-time highs. In the overnight, we still haven't made an all-time high in regular trading hours. The resistance is the people thinking, okay, I'm in this long, where do I take profit? So a liquidation of long positions becomes sellers. A liquidation of short positions become buyers. And that's the opposing pressure, is when are they taking profit? Another huge one, how is price moving? We talk about, this is terrible PA. It's gross. You'll hear us say those terms. If it's choppy or it's clean is an important thing. So when you hear us say, I'm not touching this, it's because it's all over the place and it's up, down. And my husband was sitting with me last night watching Globex, and I was like, well, just, look at the differences in how the price action is. And he was like, what was that candle? Because it's, bam, up tick by tick in just massive, even though the moves aren't massive, it looks so chunky back and forth. RTH shouldn't look like that. And when it does, it's a little scary. And the only way to really learn that is to have visited the spanking machine, as I proverbially call it, having traded that and going, well, clearly that was not a good thing for me. And I hear D. Cruz say that all the time. So Um, the last thing on that list that I have is volatility expanding or decreasing. So when we talk about things like UVXY and VIX, they're a vol product, volatility product. They're not necessarily an inverse. If you want an inverse, you go from Q to SQQQ, right? So triple Qs and an inverse triple leveraged, seeing a direction. Volatility, the UVXY just says expanding volatility, contracting volatility. And expanding volatility in an uptrend, you can see them move together at the same time. That doesn't mean we're going to sell, we're going to sell. It means volatility is expanding and things could get wild, but it doesn't mean right away, as soon as we jet up on UVXY, you're now going to sell off. And if you've been trading for a short amount of time, maybe you haven't seen that, but I've seen it for years happen where, it's like everybody's short because RSI is, we're overbought, and UVXY or VIX or VXX, which is what I used to use, was, all over the place. It's just volatility. It can give you a heads up as far as potential changes because people do come in and start hedging with those products as buyers. So that's my original mind dump about, put those on a list. But the idea is to get started with your own list and use that as a framework. So any thoughts on those things or things that you use? Because we both have completely different trading backgrounds, even though we've both been trading for a while. So run me through your mental checklist.
I'm just like taking trades, right?
Yeah. Yeah, like
So my
looking,
mental,
assessing
yeah,
the market, like how we go. Yeah, I'm not
right.
trading anything for the first half hour or that kind of
Yeah,
thing.
sure. Okay. So I do have, and you guys have, if you guys are on voice, you hear it a lot, and it's really the same thing. I mean, I haven't changed it or anything. I mean, that's what I do every day, and it's basically, I uh, I narrate whenever I do it. So, well, first 30-minute rule: open a trade in the first 30 minutes, you close it in the first 30 minutes. Plain and simple. I just don't like that data, and also that's where you get your first 30-minute ORB, right? It's so then I like to play at that first 30-minute candle kind of range, see if we have a break above that initial daily regular trading hour supply, or usually if you can, identify a range that we're in, either supply and demand, or if we're also just trending, then you got to kind of, that would be number two, is identify the day. And whatever day we're in, right? It's if we're in a trending market, depending what side we're trending on, right? If we're uptrending, well, you'll wait for dips to buy calls. You don't want to buy any pops. You'll just be chasing moves. If we're and you wouldn't really typically like to short in that day. I mean, it's harder to do. It's possible, of course, but it's just a little harder to do. Rather just kind of go with the flow idea, right? If we're bearish on a day, if we're downtrending, well, I'll wait for pops to sell, and I'll sell pops, and by doing so, or before doing so, I also make sure. So I'll watch multiple 10-minute candles. If we have a dip, I'll watch how price action reacts. If it's wicking to the downside, if there's no overhead wicks, well, that's clear that there's buyers. Vice versa, if there's overhead wicks and no wicks under, then that's signifying sellers. So you really have to just identify the day. Like right now, you see wicks all over the place. We have a typical double top right here. It's just now we're going to be chopping within this range, I think. So it's really hard to really determine. So that's also why I'm sitting on hands, and also that we're in all-time highs, right? So just kind of both of those are the reason behind me not trading right now. But if it was, if we had a clear pullback and then a test, or a retest and a hold, then I'd be more comfortable buying. But mainly, yeah, just identify the day. Then whenever I'm taking a trade, I'd like to wait for a confirmed candle close. There are some times where you do enter into a momentum candle, but that is different. And I just like all indices correlating. So I like tech strong. I prefer also, financial sectors, energy and oil sectors also performing well. Uh, and yeah, just kind of everything just correlating and signifying upside. That's the days I really like to trade. You'll see me a lot more active on those days. And just, whenever we actually just have setups. But right now it's just, there's not much actionable. I don't want to get in a swing. Anything can happen at all time highs. We could wake up and be down 20 points. We could wake up and be up 20 points, or we could wake up and be stagnant, right? And it's just whenever there's that indecision, then I just like to sit on hands.
And we are definitely in price discovery. And if you have the be
Right.
adjusted on for contract adjustments, it looks like we're at all-time highs. So from a volume-based perspective, it gets a little unclear as far as that goes, but we have never traded here prior to this actually physically on the chart. And so knowing that we want to watch SPY and ES next to each other instead of just ES or just SPY, because they can give
Yeah.
us some clues. Want to be careful cross-correlating everything like IWM is doing. Well, IWM hasn't done anything, in 2 years? I'm still waiting. I still post my levels. I'm like, yes, Russell, here we go. Nope, never mind. I guess we're not trading that again. And there are some people that trade it well. But my point is we don't really need to be, we want to see that the correlation of, can ES turn because of something that happened with NQ. We saw that yesterday. NQ made a new overnight low. ES didn't, and that was our turning point on ES. So careful how much you watch, but also don't put blinders on entirely and not have any other feedback, because ES and NQ are so close together other than the financials. They definitely affect each other. So the other thing I really want to put as far as, and again, this is just going to be a template. I want you to take it and make it your own, but check marks or awareness or whatever on some of the major trading mistakes and issues that traders make, and not just new traders, but traders, because we're human and there's emotion and we're just managing the emotions. So I'm going to just run down the list, and I replied in the Psychology Risk Management channel just as a little bump so that you can find these original pinned posts. But it was like in my first three posts that I started right after trading in the zone when I started here. So greed, no real trading plan. Did you have a plan? If you didn't have a plan and you just jumped in, need to be aware of that. Didn't have a stop loss. Your stop loss, your area of where you're going to cut this, should be part of your entry, not part of your exit. Because if you're making decisions later, all of a sudden you're adding to positions way outside of your risk parameters, what they should be. FOMO, fear of missing out, poor discipline, lack of control / over emotions. So lack of self-control and impulsiveness. I don't know anybody that hasn't had that at some point in their trading career in any of these, but you've got to be aware of them. So if you're just looking at it and asking yourself these questions, it's going to be an important part of every single trade.
Going back on averaging down real quick.
Yeah.
You can't make them all winners, you guys.
Oh yeah.
Let that sink, okay? There's no such thing as a 100% win rate in the stock market, and as soon as
if somebody says they have, yeah.
No, it's just you need to think like that. And I know sometimes whenever we're in a trade, that's the goal is to make is to close that trade green, but you can't make it green if that makes sense. You gotta if it's not that if that trade is a loss, you just cut it. You scrap it and you salvage it, right? So
yep, and I put that in chat
winners.
this morning of, do you want to be right? Do you want to be rich? Which one? They're not the same thing. They're usually inverse of each other. And it's an average down question we get a lot, especially when we've got newer members. So my next one is sizing up, risking too much on one trade. We're trying to base hit, and every once in a while they home run. If you're always going for a home run, that leads to sizing up, that leads to doubling down, that kind of thing. And that's a gambling mentality. It's not a manage your trading business mentality. So definitely. Next one would be over trading. And I saw you talk about this. It was on Voice this morning. Hey, if you've already hit your profit goal, close the screens, be done. Because if you're not really good at what that is, which that is trading, and you had a nice morning, you could end up giving it back real easy.
And just using this as an example because he's a he's a member here and he's a really good member and I love watching him grow. Jaylee, he told
Yeah.
me he was closing the charts. He's not in voice anymore. He's enjoying his day. You know, he's doing something that, you know, he needs to be doing. You know, he's going to the grocery store, whatever he's doing, or just hanging out. And it's simple. He made his money. He's done. He's not risking anything.
Yep.
You know, he'll be back tomorrow. That's just the name of the game. You gotta, you know, being seated and, you know, Ben and all of the staff that stays on voice chat all day. It's a little different for us, but I mean, we're here to
Right.
mostly just coach you up. There's a lot of times where I'm like, I'm done trading,
Done trading, but
but
I'll
I'm
hang
still
out.
here to,
Right.
yeah. But um, the overall goal is, you know, is preserve those precious gains, right? I mean, you work so hard for them, and then you don't want to just give them back and just being, you know, just making a uh, impatient trade or two.
Yep, definitely something we talk about a lot, the over trading concept, because I do hear people say, dang, I should have kept trading because I was winning, I was seeing the market well. And for me, the last trade is always a losing trade. So if I've got a series of wins, I've made money, and then I'm like, oh, I just took a loss. Okay. I'm not over trading until I'm not seeing the market anymore. And that's why we've got the rules that we have individually. So mine is if I have 3 losses in a row, I'm done trading for the day. It's over. So at the second loss, I actually put myself on a 30-minute timeout and go, well, clearly not seeing the market well. Can you guys hear the chickens outside? I guess I should ask that before there's like,
I actually can't now.
oh,
Is that those are chickens?
that's chickens. Yeah, I'm like, it's pretty loud. It's pretty loud.
Sound like little kids.
Yeah, no, that's chickens. If somebody laid an egg and somebody else is saying congratulations, something like that. It's the cheering squad. Anyway, apologies for that. So over trading for me is defined not by the number of trades, but by the execution. So if I take my 30-minute timeout, you know, and maybe it's 20 minutes, maybe, you know, like I'm going to step away from the desk, I'm going to get outside, usually no matter what the temperature is, because changing your perspective entirely, sometimes even just standing up and going to the back of my trading room and being like, oh, different perspective. What the heck was I thinking? Sit back down. But after I've lost 2, I'm much more cautious about re-entering because of that rule that I have of number 3. If you don't have that be a profit, you just need to take the rest of the day as a timeout and come back again. So defining what your over trading triggers are, trying to make it back, trying to, you know, save the account, just close the screens and literally keep your powder dry, live to fight another day. NQ just made a new all-time high in RTH. Whew. Last one for me. Oh no, there's 2 more. Earnings, playing earnings. Earnings are gambles. Unless you have insider information, highly unlikely, you should just sit them out. Or,
It's unlikely.
yeah,
Even you could even have information and you could misread that information.
well, you
Maybe
could have
you could miss
information and the
interpret
other
it.
participants in that stock, in the market, have a different agenda, have different positions. So, really important that if you're risking something, it's the understanding that it could go to 0, so you're not oversized for sure. That's the first time we've ever had the chickens go crazy during this. That's funny. Last one is poor risk management in general, which is why I created this channel. Psychology risk management is the name of the game. If you're not managing your risk, which goes back probably to all of it, you add to things, you overtrade, you get FOMO, all of that, it all goes into risk management. So your risk profile is very, very important that you're aware of, not just I'm here to make money, because it's a get poor fast scheme for trading. If you're not very deliberate, very involved in what the process is, instead of just being like, oh, somebody told me I can make money, I'm going to go join a Discord. And it doesn't even matter the Discord. If you don't predefine how much you're willing to lose, it's going to be a very long process. And that one, that list of the top trading mistakes is actually just 2 posts down. So if you click the post that I put in Psychology Risk Management, and the one like that reply will take you all the way to the top. And if you have not figured out what your edge is, if you've not figured out what your edge is, if you're not really clear on where you're headed in your trading career, probably a really important time with us sitting here at All Time Highs to actually dig into the Psychology Risk Management channel and start going through some of the videos. My suggestion is always to start with Trading in the Zone. It is the book that in 2005 turned my trading career around.
Yeah, you gotta read some Mark Douglas in your trading careers.
Yeah. You know, I read it
even
every week for a very long time, just kept going back through it.
Oh, yeah.
And I still listen to some of that. I know the minutes where they are, like some of the, like, oh, this just reminds you. Not a bad thing. And biggest reminder is anybody that tells you they've got it all figured out is probably selling you something and probably lying would be my best suggestion. So be very careful what your media diet consists of. That's one of the great things about this Discord is we're transparent, we're posting, we're talking, we've got levels, we've got all of that. And the idea is none of us are perfect ever. But that's what trading is a constant evolving process of what your trading business turns into and how you manage it. So anyway, if you guys got questions, there is never a dumb question unless you've asked me 14 times in the last 2 years and you're still doing the same thing. Then I get a little like, are you journaling every trade? Then I get a little frustrated. But aside from that, any questions that you have, we've all been there. We've all taken that trip to the spanking machine on that thing multiple times. And we're here to support you. We're here to, help you work through it as long as you're ready to have that help. And I do have noise suppression on. This is particularly loud. That's what I asked about it.
Gotcha.
Yeah, no, this is
just...
like there's normally the sounds of animals at my house because goats and horses and chickens and dogs and peacocks
right.
This is like
not even annoying. I'm just
like 6 feet from my window and about 6 chickens. It's not. It's particular. It's spectacular. That's the word I'll use. So yeah, I've got that set already. I am actually needing to wrap up. So is there anything else as far as those kind of just concepts that you had thoughts on?
I mean, that just really just kind of what we went over. Just you can't make every trade a winner. It's all about psychology of when you're reading things right. Trade whenever you're not, just play live to find another day, right? That's the goal. Wait for a day you are seeing it right.
Yep.
You don't want to rush any setups. You don't have to make money every day. You could avoid losing money, and that's just as good as making money. I mean, I know it sounds kind of, it sounds like it's not a thing, but I mean, it doesn't sound accurate.
Knowing how to sit out, I mean,
is
a superpower. Yeah.
Portfolio aspect and longevity wise, you'll see the difference. Instead of like, oh, it's only $100 red. Oh, it's only $100 red. Oh, 10 days, that's $1,000 here. Just it'll add up. And that's only, that's 10 days. You could actually add that up pretty quickly. So it's,
but, I think, just, I mean, if you have a losing day, if you, as you're reflecting on it, think, if I would have just sat this out, and I'm not talking, I took a small loss on a trade or two. I'm talking you had a really bad trading day and you blew up something, or you really just blew it in general. If you can learn to identify those days that maybe you should have just sat on your hands, it's going to be one of the most specialized skill sets you can ever develop within yourself. And that's very individual. So it has to be something you reflect on, and it's probably only going to happen with journaling. So I know I sound like a broken record, but journal. So like I said, I'm working on this one. It's an entire page for one trade. And if somebody tells me I trade too much to do that, I know they won't be here next year. That's the solid answer. I mean, it's very unlikely that they will be around. So being more selective, being more deliberate about reflection of how we're executing is critical. So here's a normal amount of noise that I have. Can you hear anything? There's just
I actually can.
okay. See, that's
Okay.
that's why I said that was when I asked about it was really loud.
Yeah.
Okay.
Right.
So apologies for
There's
the
times
chicken
where
noise.
it wasn't even that bad.
Yeah. So
You'll see it in the recording though. Yeah.
yeah, no, I knew it could be heard because I've not heard it that loud before. And I know usually people, I'm like, oh, can you hear that sound? They're like, no. Okay. All right. Okay. Awesome. It was good catching up with you, and I'll see you. We're going to do lunch and learn. I don't know if you'll be around for that, but Thor and I are doing lunch and learn in about an hour. No, 2 hours.
Okay.
So at
Sounds good. I'm about to go. Yeah, just
12:30.
get something to eat, and I'll probably be back in voice shortly.
Yep. So it's lunch and learn for zombie hour today. Anyway, see you guys in a
Nice.
little bit, and thanks for hanging out with us all day.
Yep. And like I said, you guys, I'll be more likely getting some lunch here. I'm pretty tempted to, make a trade up here, so it's a good time to walk away. Going back on what I said, and yes, we still do get tempted. I've been trading for. Sorry, see, I'm getting tempted once again, but yeah, I've been trading for almost 8 years now, going on 8 years. So I still get tempted. Still want to buy up here because it looks like a good setup. But it really is key to, just walk away and come back and look if that played out or not. And if it did, don't get FOMO. And if it doesn't, then you kind of have more of an idea, more clear mind to possibly make another play. But
Yeah, the temptation will always be there. It's how you
oh, yeah.
respond to the temptation.
I'll start charting things, and I'm like, oh, this is a nice trigger, and it's just like, oh, you don't have to play every move. You don't have to play every move. You don't have to play every move.
Well, and if we
Walk
want to
away,
transfer it in,
yes.
even though I don't like the analogy between casinos and trading, if you have to have money on the table at all times in a casino, you're cooked. It's over.
Oh, yeah.
That goes back to the impulsive gambler. Okay, I'm going to stop the recording now. See you guys later.
Cool. Yep. Have a good one.